Thank you for tuning into the Alt Funds Investment Podcast. Today's episode features Dan Strachman, a hedge fund industry expert, author of 9 books on investment management, and chief cook and managing partner of A&C Advisors, LLC. In this episode, we discuss independent directors, corporate governance, and we get into Dan's take on the alternatives investment landscape. Just a reminder here that nothing said is legal, tax, or investment advice. Check out the full disclaimer below. We hope you enjoy this conversation. Please like and subscribe if you find this information helpful, and check out the links in the description to connect with us and Dan.
The best year of my life was 2004, and I'm going to tell you guys why. 3 amazing things happened. And not necessarily in this order, because if she was here, she'd be offended that I put her third. But the first thing was that George Bush was reelected as president, and that was a great win for the American people, the world as a whole. The second thing was the Red Sox broke the curse, and they sent the Yankees packing. And I had the fortunate experience of being at Game 6 of the LCS and Game 7 of the LCS when the greatest comeback in the history of sports happened. And then the third thing that happened that year was the fact that my daughter was born. And so, that's an exciting year. I'm not going to say which one of those 3 fellas was the most important thing in my life. But let's just be honest. 86 years of a drought was something that
long overdue,
and something that was a great day. And you can't see it, but behind me, I'll tilt the camera. You're not gonna be able to see it in the camera. I made up hats that said 2004 on the front, and on the rear it said, or the back it said, the curse was reversed. So that was a good year. Look, the Yankees are a great team. There's no question about it. But they're the most hated team in sports in my world, and they will always be. And simply because ever since the Red Sox traded Babe Ruth to them, we've been for lack of a better phrase, they're and I'm not going to say the word, but you know what they are. It is, and I just hate them. I hate them with a lot of passion, and I have no problem telling people that. I think you need, in this day and age, you need to have a view, right? And whether it's a view on sports, whether it's a view on I don't know, food, booze, cigars, whatever, you need to have a view. And most importantly, what you need to have a view about is what you believe in. And you also have to be in a situation where you cannot be afraid to tell people your view. And more importantly, people need to be willing to hear your view, right? And I don't have to accept, if you're a Yankee fan, Skyler, which, please God, I hope not. And Mike, I'm like, I don't know where you're from. I know where Sky's from. So
Cubs.
who knows with him, right? Because he's got he's got that issues with college baseball. But
yes,
at the end of the day, fellas, seriously, I mean, in this world that we're living in today, people are afraid to tell you what they really think. People are afraid to tell you how they really feel. And I think that's wrong. And I pride myself on, I don't know if I told you guys I'm a Yankee hater, but it's, it says it on my LinkedIn profile. We hate them, and I have no problem hating them. But I also have no problem sitting with Yankee fans and talking to them about why I hate them. And I respect them, and they should respect me, and that's how the world should be today.
I agree. Absolutely.
Yeah.
You got to know where you stand in life, on every
Absolutely.
topic.
Yeah. And you have to respect people who have different views than yours, and they need to respect you for having a different view than theirs. That's how life should be.
100%.
Yeah. Completely
totally
agree.
Well, awesome. Well, Dan, let's jump in a bit about, obviously you have a great business, A&C Advisors. Let's talk about what you do. You've been in the industry for a long time. You've written 9 different books on investment management, which is amazing. Let's get into it a little bit and talk about your background and kind of what you do today.
Yeah. So I was born a shepherd, and I had the luck of the Irish behind me, quite frankly. And so I got my start at Kennefitt's in the late 90s, and then moved to the buy side in 2000, where I've been sitting ever since. And we launched A&C Advisors on September 10th, 2001. Everybody knows what happened the next day. And the idea of A&C Advisors is very simple. it's to provide strategic advice and counsel to investment managers across a broad spectrum of asset classes, structures, and products. So our main focus had been hedge funds for the better part of our 22 years. But over the last 4 or 5 years, we've started doing a lot more work in private equity as well, and recently into 40 Act products here in the States. And so, look, we're the guys you call if you have questions about operations. We're the guys you call if you have questions about launching a new product. If you have questions about a service provider, we have a very robust independent directorship business that really spans hedge funds, private equity, and 40 Act funds. We have a great team of guys involved in that product. And we also launched a full complement of a corporate services practice, which was a nice sort of I don't know if add-on's the right word, but a nice complementary business to our consulting practice, our operational practice, and our directorship business. The firm's been totally virtual since 2014 when I moved to Florida. So, things that other people experienced during COVID, not an issue for us. We've got a great team of people behind us, behind me, I should say. What I pride myself on as the owner of the firm and is that, the shortest tenure person with us is 9 years at this point, 9 years. And the longest is 17. So, people come to work for us and they stay. And the reason for that is because we run a good company. We do good work, and we treat everybody the same way we want to be treated. Our clients are treated really well, and our people are treated really well. And I pride myself on that. And so that's our business. And it's a lot of fun, quite honestly, because people look to our firm for advice and guidance, and they look to us when they know, and this is not a dig on any of the lawyers or accountants or anybody out there, but when they want someone who'll give them an honest opinion without a meter running, they call us, and that's it. That's what we do, and we're proud of that. We're very proud of that business, or the business.
That's awesome. Yeah, that's great. That's obviously you need that. You need that. That person or company that you can call and just get it independent. Straight to the point. What's going on with the business? Where should I go? And again, it's a hard thing, right? There's so many service providers. There's a lot of noise in the market, right?
Yeah,
with what's happening.
And look, and I think the other issue is, first of all, I'm very straight with people all the time, right? I mean, and a lot of people, I'm sure, who are going to watch this video, podcast, this vlog, whatever you call these things. What do you call a video podcast?
A video podcast.
A vlog. Okay.
Vlog. That's another one. Yeah.
A vlog, right? We've lost business because of our honesty and our straightforwardness, right? We have, and I know there are a lot of people in the industry who don't like me because I tell the truth, and I have no problem with that. I can sleep at night knowing that I never tell someone something that I wouldn't tell myself, so to speak. I don't know if that makes sense, but you know what I'm trying to say.
Where does that come from?
It comes from a very simple rule that you treat everybody the way you want to be treated, and it's always better to tell the truth because it's the easiest thing to remember. And I mean, that sounds crazy, but you know what I mean by that, fellas. You know what I mean by that.
Yeah.
That's great.
100%.
No, you need that. You need that in this day and age, for sure. Maybe more than ever, shall we say?
Unfortunately.
So, Dan, you have a handful of different business practices: the corporate governance, risk management. What are I guess what's the biggest part of your business? What are you guys really focusing on?
Yeah. So just to be clear, we don't raise capital for anybody. We don't do any of that. We don't manage money, right? We do everything but those two things. However, we can advise people on what we would think are the best strategies to raise money, right? And where to go to increase AUM. But we're not in the market selling funds. We're not in the market raising capital. We don't do any of that work. I think if you ask me what our biggest business is and where we are most successful, right now, I would tell you it's our independent directorship business. And I think the reason for that is, first of all, we've got a great stable of people in our world for directorships, right? We've got the former head of the funds practice at Walker's. We've got a former CFO of a very large PE firm. We've got a gentleman who is the current cash manager for one of the largest insurance companies in the country. So we've got industry experienced people. We have people who, I like to say this, in Skyler, you've heard me say this a million times, but our job in the world is to, or our job is to get dirt under our fingernails and get our feet wet, right? We're not here to, check boxes. We're not here to, check in once a month or whatever, or sorry, once a quarter, once a year, whatever. Our job is to give people advice, guidance, and support so that they can make better investment decisions and grow and expand their business. Okay. Now, that's why our directorship business is so strong, because unlike some of our competitors, and look, there are great directors out there. We're not, I'm not saying there aren't, but if people come to us because they want directors with real experience, people who have sat on trading desks, who have dealt with broken trades, have raised money, have written PPMs, have done everything that needs to be done to run a business, and they want that from us, and that's what they get from us. They're not looking for guys who spent 30 years at a fund administrator and then got a gold watch and now are sitting out just checking boxes and signing documents. That's not us, right? And so I think that's why our business is so strong, and frankly, why it continues to grow, and why we're able to be successful. The other business that we're in that I think is really exciting is our corporate services business. And there's been a lot of transition in corporate services over the last few years as firms are merging, getting together, whatever. And I like to refer ourselves as the little engine that could. We're the company you call if you want corporate services with a high touch of customer service, right? We got into the corporate services space, quite frankly, because we got a call from a client over in Asia who said, "Hey, every time we call a large firm, and I'm not going to mention their name, but a household corporate services name, on Monday we get Peter, on Tuesday we get Paul, on Thursday we get Mary, and on Wednesday no one answers the phone." And I said, she said, when we call you, we get, and I've got a great team of people who answer our phones and do the work. They get the same person, right? We have a very streamlined customer experience process. And so we got into that business, and I think there's a great opportunity for us there. And I see that as just another area of our business that continues to grow and expand. And it's exciting, quite frankly.
Yeah, that's awesome. And let's focus in on those. So directorship,
right.
Talk to us a little bit more about that. Who needs a director, and what type of clients you guys typically working with?
So first of all, everybody who has a fund needs a director, regardless of what the lawyers say. And they need an independent director who knows something about running a fund. But in reality, obviously offshore funds need directors. There's been a thrust in the last couple of years to move towards onshore funds getting advisory boards that provide corporate governance. And I think any fund manager, any IM that is serious about corporate governance, that wants to really grow and expand their business and have people around them who can give them advice, guidance, and support on a regular basis, should have an independent director. A lot of the lawyers are, good friends of all of ours on this call, and they'll tell you, no, a director is just a necessary evil put in place by the regimes in some of the offshore jurisdictions and whatnot. I don't believe that, and maybe it's selfish because I want to grow my business, but I also believe that if you're focused on corporate governance, then you need an independent director who has experience, who can be a sounding board for you on a regular basis, so that you can really have someone to talk to and grow, help you with building the roadmap to getting your business, to growing and expanding your business.
Absolutely. I always say it's a team sport, right? You need to have a good team around you, not just the operations, but an advisor focused, consultant or groups that can just say, hey, you know what, to your point, this is what you're doing wrong. This is where you should go. This is the roadmap, is what you said, which is great.
Yeah.
That's awesome. What do you, just curious from the state of the union in the industry today, where do you see kind of just challenges, opportunities, whether it be asset class, types of funds, Where do you see kind of things happening in your space right now?
Yeah, I mean, so we're seeing a dynamic shift away from PE. We think that PE is probably, for lack of a better phrase, dead. We don't see it coming back for some time. Right now it's deck chairs on the Titanic for most of these PE firms. Buying, excuse me, they're selling their investments to other PE firms because the IPO market's closed and it doesn't look like it's going to open up anytime in any significant way anytime soon. So one PE firm selling their bad investment to another PE firm because they need to get an liquidity event, and the other PE firm needs to put the capital that they've got committed to work. I think that smart investors have woken up to the fact that most of these PE managers really have no idea what they're doing. They just are, literally, making investments with OPM and hoping for the best. And you can, it's interesting. You definitely can see that in what's happening in the fund administration space here in the U.S. and globally, I would say. But by these big PE firms coming in and just paying ridiculous multiples. So we are. I personally, I think PE is dead, and won't be revived for quite some time. Um,
On
hedge
that
fund.
topic,
Yeah.
say more. Say more. What's like the main drivers of these issues of the PE funds?
Well, first, the biggest issue with the PE funds is that investors have woken up to realize that most of these PE funds don't know what the hell they're doing, and they're making they make bad over bad over bad investment. Second of all, institutional investors in particular, and as you guys know, I'm a co-founder of the Investment Management Due Diligence Association. It's the largest independent organization focused on educating institutional investors on best practices for due diligence, both on the ops side and the investment side. And we are talking to, we're talking to LPs. All of our 95% of our membership are LPs, and they're legitimate LPs, right? It's OTPP, CalPERS, CalSTRS, NYSERS, Adia, G, Temasek. I mean, pick them, and we're talking to them on a regular basis, and they're saying to us, "Look, we can't. We've talked to all these PE firms. These guys don't know what they're doing, and that's a real issue right now." Second of all, I think that besides the fact that there's been a wake up call that these PE firms are having a hard time making investments. The second thing is the liquidity issues, right? There's significant liquidity issues, and when you have markets that, for all intents and purposes, are locked, and you can't really create liquidity events, you put yourself in a position where that capital, can be locked up for quite a bit of time, and the only way you can get a liquidity event is if you find someone to sell something to, right? And so I think that's an issue. And then the third issue is, quite frankly, that people are paying too much for products, right? They're paying up too much, and they're realizing that there are better ways to make money in the markets than locking down capital for 7 to 11 years, right? Right, and so
Right. Right.
I think that that's the issue, and until we, maybe there needs to be some sort of shakeout, and I think we're seeing a little bit of that. But right now, I think that that's where we are in this industry, and look, I'm not saying all PE funds are bad. I'm not saying all PE funds, should go out of business. I'm not saying all PE funds are making terrible investments. And, of course not. There are funds that are doing a good job, and we all know a lot of them and work with some of them and respect them. But at the end of the day, the industry itself is I think is in not a death spiral, but pretty close to it.
Yeah, you definitely bring up some interesting things, Dan. Even just talking about debt, that's my concern actually with a lot of these service providers who are PE backed. The debt service with inflation and the higher interest rates, how are you going to cover that debt service going forward? That's my biggest concern too.
Yeah, I mean, if you look at our industry in particular, right, and our industry is the investment management industry, right? So let's just think about that for a minute. I mean, we don't have to name names now, but we know that there's one large fund administrator who's buying everything they can, right? And they're leveraged to the hilt. We know because the deals have been made public and the information about how much debt they're taking on. And we also know that business that they're buying is commoditized and in a race to zero, right? I mean, if anybody who doesn't think fund administration is in a race to zero is not awake, I mean, I don't know how else you can say that, right? And anybody who doesn't think fund administration isn't commoditized is less than awake. I mean, I don't know what so how are they going to make money? How are they going to pay off that debt? How are they going to get a liquidity event? I don't know. And if I'm not saying that I might start a fund admin tomorrow and sell it to one of these guys, right? I mean that's
right.
if the three of us were smart, we would get off this video podcast, start a fund admin, right? Go get 5, 6, 10 billion in AUA and go sell it to one of these guys. I mean, but look, the debt load on these things are tough. And not just in the service businesses that we're talking about, but look at what's happening in commercial real estate. Look what's happening in retail real estate. Look what's happening in multifamily housing real estate. Right? I mean, those times. Pick an industry, pick any industry, and right now, and most of them, you'll come back with things aren't so great. Things aren't so good. And that's problematic if you're a PE fund and you're buying those things. And the other issue too is real quick, and then is the hunt for unicorns is over in a very big way in light of what we saw with a couple different companies. One, WeWork. Two, this thing called what was that one called that just blew up November? Began with an F, ended with an X, and there was a T in the middle. Right? I mean, the
there you go.
Right? Oh wait, did I say that? FTX. Let's be clear. I mean, the concept of the unicorn hunter and the unicorn finder has, in my mind, been blown up, right? And I mean blown up in a bad way, not in a good way, right? Because you could say things are blown up in a good way, but this is blown up in a bad way. I think there's been a real slap in the face to a lot of these venture firms who've gotten a very, not that they just get a wake up call, they got a bucket of water dumped on them, and people have smartened up and said, you know what? We don't want that. We want something that we can touch, feel, and we can at least see a real balance sheet that's traded, on a company that's traded on a stock exchange, or a buying debt on a company that we see the debt trading on a very regular basis, so we can get a real value for it versus these ridiculous valuations that are really just quite silly to think about. I don't know what the word is there, but anyway.
Yeah. No, yeah, definitely interesting to see where things are going, right? So obviously everything's terrible right now.
No, I don't think so. Oh no,
I'm joking.
Look,
I'm joking.
there are some terrible things right now, but you know what happens when there's terrible things? Great opportunity. That's great opportunity. 100%. If you ask me, listen, I think I'm older than the two of you. Although Skyler, you're like that guy in the CIA in that movie Spy Kids or whatever it is, where they go, he's got 20, they've got 20 different birthdays on you. So I actually don't know how old you are, Scott, but I'm going to assume that I'm a little bit older than you. But look, I've been in this hedge fund space since 2000. I was on the desk at Cantor when Netscape went across the tape the first day, and I remember the tech bubble. I was there, and then we got involved in the hedge fund industry around that time. And look, 2000 was a drought, and then 2001, the world fell apart at the end of the year. But what happened? Boom time for hedge funds, right? Boom time. 2008 comes, the world falls apart. A bunch of guys make a bunch of money. 2008 comes, 9, 10, boom time for hedge funds, right? We pushed that ahead 7 more years, and you had boom time for PE, right? I mean, that's when we were in the salad days of PE. So where are we today? We're about 4 or 5 months, 6 months away from boom time for hedge funds again. And there's ways to think about now. That's good for a lot of different reasons. First of all, it's good for my business, good for your guys' business, good for all business, right? It's good for the liquidity in the market, which is what we need. Right? It's good for investors who are going to, start seeing returns on capital. It's a great opportunity right now to be in this business. And yes, I think the economy is in a recession. People don't use that word. They say we're getting to a recession. I don't know what that means. When I go to the store to go buy eggs, and it costs me $5 for a dozen eggs, and it costs me $7 for a pound of butter, and I'm buying a head of lettuce for $3, that's hurting me. Okay.
Right.
And it's hurting a lot of people. And it's a global issue that we need to start thinking about. But there is opportunity right now, and there's a lot of opportunity right now. And I'm frankly extremely bullish on the opportunity. I'm not bullish on the economy, but I'm bullish on the opportunity that exists, for folks like us and folks like our industry, and what that means for, Joe Q public investor.
Right.
Yeah, absolutely. So where do you see the biggest opportunities in terms of like in general? You mentioned you liked hedge funds, a couple
I
months from
love hedge
now.
funds. Oh, I mean, look, look, what am I buying on a regular basis? I'm buying Costco and I buy Tesla. Okay, once a month, right? I'm backing up the truck on both of those. But no, I mean, I'm not a stock picker, and I'm not suggesting that I know anything about picking stocks, because I don't. But look, I think that there's a lot of opportunity in the investment management industry. I think the interesting thing that we're seeing, coming out of the SEC, is sort of all these regulations, and it's still a little too early to determine if these regulations will go into effect 100%. We don't know yet, right? Because there's some legal issues there, but
Mm-hmm.
I think there's opportunity there, and because there's great opportunity. Once you know what the rules are, you just figure out how to play the game, and that's what'll happen there. So, but I do think that the hedge fund industry is going to go through a boom time, and then starting in the next 4 to 6 months. I think there's real opportunity there. I think the equity markets are opening up in a very big way. And I think if I was going to, I'm a Graham and Dodd guy, right? I'm a Buffett guy. If I move this way, you can see that's my Charlie Munger Squishmallow over there, right?
There you go.
I'm a big fan of those two guys, and in particular, I'm a Charlie guy. I know there's Warren guys and Charlie guys. I'm a Charlie guy, but I mean, look, I think there's relative value is going to come back into play. I think, looking at margin of safety is the way to go to make investments right now. And I think that, how do you not love, the 10-year? I didn't look at it today, but you can buy. I mean, how do you not love that? You're buying bonds from uh,
Yeah.
from the government, and they're paying 5 plus, right? I mean, how
Right.
do you not love that? So I think that's what, Mike, to answer your question, I think that's why hedge funds come back, right? And not come back because they're not never were dead, but I think that's why they come to you start seeing more and more activity, because opportunities are presenting themselves. The other thing that I think is pretty cool, and I know you guys are big tech weenies, and I'm not, but we're putting together, we're planning on launching an office in London later this not sorry early next year, and so we're putting the infrastructure in place right now for that. And um, we used ChatGPT the other day to write the job description, and we sort of did it on the lark because
Mm-hmm.
we thought it'd be kind of neat to see it. And I think that's amazing. And I think that that's really, it was such a simple thing that we did, right? Hiring a managing partner or managing director of UK office, blah 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 blah. Give it 3 ideas, and boom, it comes out.
Right.
And I think that's really amazing. I think that technology. I think if you were to ask people what interesting thing has happened in technology in the last 10 years, I think they'd say, I don't know, right? I mean, the phone hasn't evolved. Excuse me, the phone hasn't yet been brand new, right? It's just gotten a little better. And the reality is, the only thing that's gotten better on the phones is the camera and the chips, right? But besides that, like, and frankly, I don't think any of us can tell the difference of like the camera and the chips, right? I mean,
Yeah.
it's not like, I mean, you could launch a space shuttle from your phone when they launched the phone, 15 years ago, whatever. It hasn't changed all that much, right? But the evolution of I think, is really impressive. And I think that anybody who doesn't think that is crazy. And maybe everybody does think that. And people are saying, who doesn't think that? Strachman, you're an idiot. Well, I'm sure there are people who say that, right? But I think that that's pretty exciting, and I think that we're not even in the first inning of the game. We're right at the, maybe the pitcher's just about done with his warm ups, and he's gonna and the batter's stepping into the box in the first inning for AI. So I think that's pretty exciting. I think what's going on in crypto and DeFi and blockchain is, I can, we've had conversations, the three of us before, about this, and people who don't see that crypto is a real thing are the same people who said, I'm never going to use email, or I'm not going to use a fax machine, or right, or
internet is dead.
Right, or like headlights on a car aren't necessary, right? Like if you, so people who don't, and I get that people don't understand how crypto works. I get how people don't understand how blockchain works. And quite frankly, I only know how to use a little bit of crypto, and I know a little bit of blockchain. I'm not an expert by any stretch. I haven't gone online like some people on this call and taken that MIT blockchain expert, pay $6.95 and you get a little certificate. By the way, we offer a certificate for $3.95. Anyone who wants that? No, I'm kidding. But my point is that Mike, you asked what's hot. I mean, those are two things. I think the crypto, DeFi, blockchain, and I lump them all together. That and AI, I think are combined revolutionary, right? And are only going to make our worlds better, and only going to help us, achieve greater things. As you guys know, I I have two people in my family who are type 1 insulin dependent diabetics. And I just am excited about the role AI can play in helping researchers figure out a solution to that very difficult disease, right? And that's what that is. It's a disease, and or maybe people want to call it disease, but I think of it as one. And I'm excited about that. I'm excited about that. How not only AI can help with something that's important to me, but how it could help with cancer research, how it could help with heart, solving heart issues, right? And I think that's what's exciting, right? And blockchain, the simplest thing that blockchain do is can solve the supply chain issues that we're having with food, right? And people are like, well, it's going to be able to ship, I don't know, cars cheaper, better, and faster. Okay, but how about the way Chiquita ships bananas? Or how about how grain comes out of the Ukraine, right? I mean, or how, I don't know, rice comes out of China. I don't know. You know what I'm saying?
Yeah.
And that's where blockchain can add value, and we don't even know what it can do yet. Right, that's the beauty of it. We
Still
know
early.
a few things, right? We know a few things, and we're all excited about it. Or some of us are. Obviously, I am. You guys are. I know you are. But maybe other people aren't. But that's what's exciting, right? That's so. Is there money to be made in that? Absolutely. Is there money to be made in AI? 100%. Is there money to be made in the medicine evolving using technology? Absolutely. Is there money to be made in blockchain solving supply chain issues and other things? I have a good buddy of mine who is he's a CFO of a large hospital complex up in New Jersey, and we talk all the time about how they're using blockchain to manage medical records, right? I mean, that's a pretty cool thing, right? And most people would step back and say, well, like, how does that work? Well, I don't really understand how it works, but he tells me that it's working, and he's explaining it to me after talking to him for an hour. I know how it works, right? But I mean, so there's so many applications out there for blockchain, for AI, for crypto, DeFi, that it's really cool. Now, is there a lot of noise? Of course there is, right? And I'm short all the apes, okay, right now, and is it silly to waste time, or excuse me, is it silly to use ChatGPT to write a job description, which I could have probably written, not as fast, but relatively quickly? Sure, but it's something. But that's how you learn. That's how you engage. That's how you get become smarter or become exposed to things. Try stuff, right? And that's sort of what we do in our business, and it's sort of what we do. So, I mean, like, that's a long answer to your question about what I think is hot, but that's where I'm thinking about.
I love it. I'm thinking about a lot of the same things.
That's great.
A lot of opportunity, AI, crypto, like you mentioned, health, genomics.
And like you said, just digging into getting your hands dirty, right? You have to do that. That's how you learn. I think just digging in, figuring it out.
Right.
You're going to make mistakes. You're going to break stuff. That's fine.
You got to break stuff.
You have to,
right?
Yeah.
You have to break stuff. If you don't break stuff, then you're not doing it right. Okay, and that's our business is built on solving problems, but a lot of times we might create some problems too, right? I mean, it just happens, and then you solve it, right? I mean, that's what you got to do. People, but I will tell you, I think a lot of people don't want to do that. It's like there's nothing that pisses me off more when I have someone who emails me instead of picks up the phone and calls me, right? I mean, you guys get them all the time. You get these like, "Hi, I'm trying to sell you some new technology which is going to make your life cheaper, better, and faster." Right? Okay. Well, pick up the phone and call me, man. Like, sell me something, right? What happened to those days, right? And I think there's a real issue with engagement, and I'm a big believer in get your feet wet, get your hands dirty, and be engaged, which is what we're talking about here, and that's what's exciting to me, and that's what gets me going every morning, and why I get up every morning and I have a blast with what I do, because I'm engaged, and all the people who work with us are engaged, and and I know you guys are engaged, and but I think a lot of people aren't engaged, and you know what? It's good that there are people who aren't engaged because we can take advantage of them and make money off. Right?
Absolutely.
More opportunities for us. Exactly.
Absolutely.
So with I'm curious to get your thoughts on the hedge fund industry. We touched on PE a little bit. Talk to us about the future of hedge funds. Where you see all this going, and what do you see in the crypto fund space as well?
Okay, so let's first of all, as the author of 9 books on hedge funds, I'm bullish on hedge funds. Okay, I'm just telling you that, and anyone who doesn't think that, no, I am 100% bullish on hedge funds. Look, in my mind, there should not be mutual funds, or right, because the idea that an investment product can only make money if the markets are rising is insane to me. Okay, and I understand that there are people who need exposure to the S&P 500, so you should have an ETF that has that, and there are people who want exposure to, I don't know, the Russell 2000, right, or a basket of stocks, and I get that, but the idea of putting money into an investment product that only makes money when markets rise, to me, is insane. Okay, it's like saying, and most people don't do this. I mean, uh, Sky, I know you know how to drive a stick shift car. I drive a stick shift car. Mike, I don't know if you know how to drive a stick shift. It's not an issue if you don't, although you should learn. But you can't, like Skyler. If I said to you, Sky, can you drive a stick shift car with one hand and one foot?
Yeah.
The answer is yeah. If I'm dying and I got to get to the hospital, I'm going.
Right.
But it's not. It's very difficult.
Not ideal.
Right.
Yeah.
Right. It's not ideal. Right. I mean, you can't shift. You got to. You can't clutch. You can't whatever. Right. That's what you're buying when you buy a long only mutual fund. Right. You're buying a product that is getting only half of the opportunity. So, but on the flip side, if you are investing in a hedge fund, you need to make sure that hedge fund, the people know how to hedge, right? And actually know how to do risk management.
Very true.
And they need to, so I am bullish on hedge fund managers that actually know how to be hedge fund managers. Okay. And I think that what's happened in the last, let's call it 15, 20 years, is that there is the realization that there is no better business in the world than being a hedge fund manager, because the cost of entry is so low and the potential for reward is so high that it attracts a lot of different people. Now, the reason the cost has come down is because the evolution of the service provider industry, right? And for a while, the service provider industry was pushing the industry forward. It wasn't the managers, which is insane to think about, but it's true.
Yeah.
So now the three of us could start a fund, on the high, if we really want to spend a lot of money, a few $100,000, but we could really get it up and running for, $15,000, $20,000, maybe even less. I don't know. But that's a bit of an issue because it attracts too many people who don't know what they're doing, and that's a problem. So I think though, I'm bullish on real hedge fund managers. I'm bullish on real hedge funds. I'm not bullish on this idea that, anybody can be a hedge fund manager because they just can't. So I am bullish on the industry, and I do think it's going to continue to grow and evolve. And I am a big believer that you should invest in products that can make money when markets rise and when markets fall. But you need to make sure that the person or people who are making those investments know how to make money when markets rise and know how to make money when markets fall.
Yeah.
In terms of crypto, I think that crypto is here to stay. I think that crypto managers, I think that I don't know if we're in a crypto winter now, or maybe we're in a thaw or a spring, whatever we're calling it. I think the best thing that happened to crypto industry was all the crisis that occurred last year, because it got rid of a lot of the knuckleheads, quite frankly.
Yeah.
And I think it present the industry now, particularly, I talk to a lot of funds in the space. We're involved in a couple funds in the space. Those are real money managers, who are looking at crypto as a real asset class, not as some sort of something that just came out of the ether, by Satoshi, right? It's something that's real, and they're looking at whether it's specific coins or whatever. They're looking at it from a real asset class, like you do gold, like you do equities, like you do fixed income, and I think that's exciting. I think that it's very difficult to raise money right now, at least what we're hearing in the crypto space, but that's okay. And I'll tell you why that's okay. It's okay because that means investors are getting smarter about how they're picking managers, and they're allocating to managers who actually know how to manage money. And I think that, we've all heard about the frauds. We've all seen the funds going out of business. And those folks are the ones that should be going out of business. The fraud should go to jail, and the ones who don't know how to manage money should go out of business, like I said. And I think the industry itself, if you think, I think the crypto fund industry goes away, and it just becomes another asset class within the hedge fund industry. So just like we have funds that trade equities, we'll have funds that trade fixed income. We have funds that trade private credit. We have funds that trade, commodities. We'll have funds that trade crypto. And I think that there won't be in a year or so, there's so much of a like, oh, it's a crypto fund manager. No, it's a hedge fund that trades crypto, right? I think that it's a different way of maybe thinking about it, but that's how I'm thinking
about it. No, that's great insight there, Dan. All that there, I think that's very helpful. Just for quality, man. There's a flight to quality, right? So
100%.
Running through that process is great. I just get your thoughts on capital raising. You kind of mentioned that it's hard, obviously, across the board. How do you advise, given, we've talked to a lot of managers, what strategies do you kind of go over with them who are looking to raise capital in this interesting environment right now?
Sure. So my number one thing, and I've written extensively about this, is that the number one rule when you're raising money is everywhere you think money's coming from is exactly where it's not going to come from. And everywhere you never thought it was going to come from is where it is going to come from. And if you take that, and that's, I tell that to every manager. It's in all my books. I've written articles about this, spoken about this. And that the hardest, there's two jobs in this world that are the hardest jobs in the world, in my opinion, in the financial services space. All right, there are a lot of hard jobs, but in the first is the marketing and business development guy for an accounting firm. Okay, and the reason I say that is because it's that guy or girl can only open the door, set up the lunch, and then they need a CPA to come in and close it, right? Because that person isn't doing the work. That's a tough job. Okay, and I'm sure one or two of the people who watch this are buddies of mine in that role, and they're going to say, "Hey, can you tell my boss that?" But because it is true, that's the hardest job. The second hardest job in the world is raising capital, and the reason for that is because you need to not be afraid to ask people for money, right? And when I was learning how to sell and when I was learning how to build businesses, and I sat at the knee of a great guy, and he said, "Look, you can't be afraid to ask for the order." And I think that when you're going in to raise money, people go in and answer a question before it's asked. Oh, Skyler won't give me money because he just left, company X and is now building company Y, so all his money's tied up in building company Y, right? Or Mike won't give me money because he's a crypto guy and he only allocates to crypto. And so they're answering a question before it's asked, which means that they're destined for failure. Okay. So my advice to people is, the simplest way to raise money, and this is a guy taught me this probably, I don't know how long ago he told me this. He said to me, he goes, he used to call me Danny, and like nobody calls me Danny. Really, like nobody. This guy used to call me Danny. And he said to me, he goes, Danny, this is what you do. He goes, every time you go and talk to an investor, ask them for 10 names. Okay. And you get them to give you 10 names. And they might not all give you 10 names. Some of them will give you 5, 6, 10, right? But you sell them on the idea that, hey, you like what I'm doing for you. So therefore give me 10 people that that will benefit from that. And you ask those 10 people for 10 names. So now all of a sudden your 10 names, your initial group of 10 has exponentially grown to, 1,000 names, right? And yeah, they're not all going to be failures. Excuse me, successes. Some of them are going to be failures, but that's the beauty of what you're doing. You gotta not be afraid to ask for the order. You gotta not be afraid to ask for referrals, and you gotta be willing to put the time in to go after markets that you don't know the answer to the question. You have to be willing to know that you don't know the answer to the question, so you go after those markets. And
Well said.
People don't do that, man.
No, they don't. I totally agree.
One other thing I was thinking about is how you mentioned the service providers, kind of fees are racing to zero.
Yeah. Well, I would say
What do
that
you?
fund admin. I mean, brokerage is already there, right? Right.
Yeah.
Brokerage is already there. Where brokerage is making money now is on margin, right? Because rates have finally popped and they're making money there, but commission's down to nothing. And admin is what I meant. Accounting and is not because of the issues the accountants are having and finding people doing the work. And legal is legal. I don't think ever will race to zero, but there is a zero option now where there wasn't, let's say, a zero option 5 years ago. And what I mean by that is it's not really zero, but it's, there's guys here in Miami, there's guys in Atlanta, there's guys out in Arizona who, 10 grand, they'll put a fund together for you. It's not,
No.
right. So it's not a zero number, Mike, but it is. Fund admin, it's going to zero. Okay.
Okay. With 700, admins globally, that's a lot. You got to really differentiate yourself, right?
Well, and all of them are owned by one company, right?
The domino effect. Yeah. It's definitely it's a tough game. I definitely can understand. There's a lot of different moving pieces. I would say just even 2 or 3 years ago, there's a lot. We talk about it's a very antiquated business. A lot has changed. Going from pre-COVID, time frame where people were still using, paper to send in sub documents, right? You think of that, and now we're really, if anything was good about COVID, which a lot of things were terrible, it pushed people to a digital environment and to go remote.
It did,
100%. Right?
But I mean, so it's interesting because one of the applications for blockchain is subscription documents.
Right.
And I mean, again, I wish I was smarter because I'd be a gazillionaire figure out how to make that product because that's a product that's needed. Why can't we use blockchain for all subscription documents and redemption agreements, right? Subscription docs and redemption requests, I should have said, right?
Right.
Why shouldn't we? Right, that's a natural. That should be.
And eventually the accounting too. I mean,
right.
It'll likely eventually be a blockchain.
Right, and I don't know if it's getting there yet. I don't know.
Years
I'm
away.
sure. Yeah, but I'm sure that someplace at SS&C there's some guys toiling away trying to figure this out because they're with Advent, they own Advent, obviously, and so those guys are trying to figure it out. But yeah, I mean, these are naturals, right? I mean, they're naturals that just, I don't know.
Yeah,
Smarter
it's
guys
definitely
than the
interesting.
three of us will figure out,
Right. Yeah. It always bothered me that the retail investor has a better user experience from an onboarding perspective going through a brokerage firm than a high net worth individual that goes through a service provider to be onboarded with subdocs. So the process is still very chaotic a lot of times.
100%. It's embarrassing.
Yeah.
It's chaotic and embarrassing. And what's most embarrassing is not that there's two things that are embarrassing. The first is that those service providers who offer that service are offering that service. It's embarrassing that they don't realize how bad they are. The second thing is it's embarrassing that investors don't just say, we're not going to invest in your funds anymore unless you fix this, right? I always tell people, when they ask, people say, well, what do we do if the manager won't tell us what they're doing with our money? We're redeemed from the fund because it's your money. You have every
Right.
right to know what's happening with it at all times. And you know what? If you're working with somebody who's investing or using some platform that's completely antiquated and they're looking for, PDF signature, come on, get them out. You should be. The person who's selling that service should be embarrassed, and the person who's making the investment should be embarrassed, and they should say, we don't want to be part of this.
Yeah. Yeah. You gotta have great process and a great service. And if you just, even too, you go the other way where there's great technology platforms out there, but there's no client service. So it's like something's great until it breaks, and then there's
Yeah,
a problem, right?
yeah. I mean, anybody who's in the service business that doesn't pay attention to client service shouldn't be in the business.
Yeah.
We should, I mean, and that's it.
One more question I want to ask for you, Dan. What type of advice would you give to somebody looking to start a hedge fund today, or any type of fund?
So first of all, I would say that the most important thing, if you're going to start a hedge fund, is before you go and try to attract capital or try to, build the infrastructure that you need to run a business, is have some real experience of investing. That's that is, that you can really show somebody that you're actually doing something, and not with 25,000 or 50,000. I mean, have some real capital behind you, and really focus on building your skill set in trading and investing, and understanding how markets work, how markets move, how to come up with an investment thesis and implement it. The second thing I would say is you need to also focus on understanding that there is more to running a hedge fund than actually managing the money. There's an operational piece, there's a customer service piece, there's an asset raising piece, and obviously the investment management piece. And I think it's important that you look, if you want to be serious about the business, that you have people or uh, processes in place. Actually, you need people with processes in place to really run a business. It's not, yes, two guys or two girls named Mo or Maureen can hire a lawyer, set up a fund, and pretend to be in the hedge fund business. But that's not the real world. The real world is, build an infrastructure, have capital behind you to operate your business, um, engage real service providers who are going to do a good job for you, and really focus on building a business. It doesn't mean you have to launch with 100 or 200 or 500 or billion in AUM. No, you can launch with $5 million, and there's a place for funds out there that launch with 5 million, and we all know funds that started with 5 million are now at 500 million and a billion, right? I mean, that's not unreasonable to think that could happen. However, the only way it's going to happen is if you can really, have put together a roadmap. Well, I guess we're using that again, but a roadmap for success, which includes having people in the right seats doing the right jobs to allow for success to occur.
That's great points. Yeah, that's excellent, Dan. Yeah,
Oh,
100%. A lot of people don't run a bit. They trade and then they don't run a business as run their fund as a business, right?
Right. It's a business, right?
Yeah,
100%. And people need to think of it that way. This isn't a game, okay? It's a game when you're using your own money, okay? It's a game. But when you're using other people's money, it's not a game. Okay. And you can't treat it like that. You have to be serious. You have to be committed. You have to be, flush the side hustles and focus on the business. I mean, that's what you have to do. And look, I get it. It's hard to do that from people, right? It's hard to give up a job and go out, give up a job. You're making a few $100,000 a year, and traveling on someone else's dime and eating at great restaurants and, going to the World Series, but it's hard to give that up. I get it. But and look, I think it was Judge Smalls who said the world needs ditch diggers too, right? You know what that's from? Anyone? Caddyshack? Okay.
Caddyshack. Classic.
Okay.
It's a classic.
Okay, just checking. All right. So thanks, Skyler. Mike's too young. But I mean, but my point is, like, not everyone can do this. But if you are going to do it, you have to take it seriously, and you have to, put in place, the right processes, get the right people for the seat, and realize that that's the only way to be successful. Yeah.
Love it. Dan, this has been amazing. Where can people go to connect with you and learn more about your company?
Well, you can go to www.A&CAdvisors.com. That's AANDC Advisors.com. You can also hit me up at DAS, that's Delta Alpha Sierra, at hedgeanswers.com. And then, I guess I'm on LinkedIn. No, I am on LinkedIn, but yeah, hit me up. And our business, look, we like to make money, and our business is in the business of making money. But if people have questions or they want some, something, ask me or get advice on something, we're happy to get on the phone with anybody at any time. Our meter doesn't run unless there's something that we're actually doing. So, but we're happy to talk to anybody at any time. So, yeah, so hit me up.
Sounds great, Dan. We will include all that in the show notes.
Thanks, guys.
I hope you enjoyed this conversation. Please make sure to like and subscribe for more content like this, and reach out if you're interested in starting a fund, whether it's a hedge fund, VC fund, whatever fund you're thinking. We can help you out, and let us know if there's any other topics that you'd like for us to cover. Thanks for watching.